The US dollar is benefiting from times of trouble, and a possible Fed hike is also helping. Jennifer Lee, BMO Capital. German Chancellor Angela Merkel has indicated that the EU and the USA are drifting apart under President Donald Trump. What benefits could be lost in this dying relationship?
I don't think it's just the relationship between Europe and the U.S. It's the U.S. and Canada as well, the U.S. and Germany, the U.S. and the U.K. It's almost like I'm getting this growing sense, or we are getting this growing sense that the U.S. is growing apart from all of the G7 countries. And I think especially now it's very important to maintain a sense of a strong unity among these countries. And these are, especially in times when you have other groups trying to, disrupt the peace among these large nations. And when you have a lack of unity on key issues such as trade or climate change, I think it opens up potential avenues for these other groups to attack or to step in. I sort of liken it to an Achilles heel. You don't want to have a weak spot. And when the G7 is not unified, as I said earlier, it sort of weakens the entire group. And this is a group that represents about a third of global GDP. Now, I don't know if I would use the word dying relationship. It's right now the relationship is the way it is right now. The way it stands is just due to the current U.S. president's views or stance, which is quite different, as we all know, from previous presidents. So who knows what the next administration will bring.
The US economy grew by 1.2% in the first 3 months of this year. What contributed to this fast pace of growth?
That 1.2% was definitely an unexpected uptick from the initial estimate of 0.7%. There was stronger support from all different areas of the economy, or almost all different areas, such as consumer spending, business investment, or more specifically non-residential structures. Government spending was also less negative, and we also had slower import growth than originally anticipated. So that sort of contributed to the stronger than expected reading. But we just have to remember that overall Q1 was still, despite this upgrade, Q1 was still a very soft quarter, and we can blame it on seasonals, but also personal spending took a breather after 3 straight quarters of strength. So we need to see stronger spending and more business investment playing out for the rest of the year. The Fed so far sees Q1 softness as being quote-unquote transitory, and they are looking past that. So we still expect the Fed to tighten in June.
The dollar remained strong after the North Korea missile test against a number of currencies. How did the dollar break away from the previous low levels?
I'm not sure if I would call it a case of U.S. dollar strength per se, more like some of the other currencies have been weaker, which has helped the dollar break away from these lows. As a few examples, we had the British pound hurt by the suicide bombing in Manchester, and Prime Minister May's narrowing lead in the polls, and some softer economic data of late. The euro is still being hurt by continued cautious tones from ECB policymakers, and closer to home for me, the Canadian dollar has been was hurt last week by a disappointing OPEC production cut, which failed to meet expectations. So I think it's more of a case of other currencies being weak. But of course, the U.S. dollar is still, it benefits from times of trouble, and of course, and expectations are still, as I said earlier, for the Fed to raise rates. So that's probably giving the U.S. dollar a bit of a lift.
Well, thank you, Jennifer, for joining me today, and thank you at home for clicking back.